Are you using Strava to record your marathon runs, or how do we know that you're actually a marathon runner? Because if someone is a vegan or is doing Ironman, we hear about it nonstop.
That's the problem, Gilad, of modern day society. There's no trust, is there? You just got to believe me. I'm a marathon runner. Look at my figure.
I look at that. It's so impressive. And Yaron, do you run anywhere, or it's like
I'm not
after
a
the
runner.
kids?
Definitely not. I do run after the kids for sure, but not very well. Let's put it that way.
Well, you don't really help the carbon footprint here, which is kind of the main topic for today. Carbon insurance and Oka. How about we'll start with background introductions, Yaron, because we met in the past several times. No, how about you'll start? Because last time we met, Haven Life was the thing, and now carbon.
Yeah, it's great to be with you again. So as you know, Gil, my background is in InsurTech. I've been in insurance, I don't know, more than 10 years now, and long enough to say that I started before InsurTech was a word, and we were still debating how to spell it correctly. But now that that's passed, the last 10 years I spent in the life insurance world, where I built a company called Haven Life, which was one of the first direct-to-consumer life insurance plays, and grew that business and sold it and brought it in-house to Mass Mutual and grew it for them over a period of 7 or 8 years. And really kind of fell in love with the InsurTech space, both in terms of how important it is and how much value it could create in people's lives, but also in terms of how kind of complex and interesting it was to build businesses in the space. And so I left Haven the end of 2022, took some time off, did some traveling, spent some time with my kids, and then had this crazy idea in my head that if there was a way for me to combine InsurTech and what I had been doing in the space with an entrepreneurial bent and combine that with climate, that was something that would be kind of my ideal about as I was thinking about what to do next. And kind of in that journey, as I was trying to get smart about the space, I was lucky enough to meet Chris and the folks at Oka, and I'll let him take it from there. But got really excited about what they were doing and joined the team as of a few months ago.
Congratulations. That's a big change. Chris, how about you? How did you end up in insurance?
So I'm a lifer, I'm afraid, Gil. So yeah, I know. Don't hold that against me. So about plus 20 years in the insurance market. So I started out a large UK-based corporate and was fortunate enough to be in a startup team, really building a direct-to-consumer home and auto insurance business here in the UK called More Than. And I think that sort of itched the entrepreneurial scratch for me, or scratched the entrepreneurial itch for me, in that I wanted to start something. So I jumped ship and started one of the very first InsurTechs in Simply Business. So co-founded Simply Business here in the UK in 2004, and then grew that over 13 years to be, it's now the largest provider of online small commercial insurance in the UK. It's about 1 million customers, a couple of 100 million revenue. And as part of that journey, was fortunate enough to then take it international. So I jumped over the pond, launched the business in the US, and then just as if things were getting interesting, Travelers came and acquired the business in 2017. And I then stayed as an advisor, really helping them with their US business, ultimately leaving the business in 2020, 2021. So I had a wild ride building a business with both a digital capability, but a real belief in culture as well. The teams that we put together to really solve complex problems got a crazy valuation, which was great for everybody involved. But then I've sort of spent the last 4 or 5 years in venture, so both investing and helping businesses, and sort of stumbled upon this idea of insuring carbon credits really at the beginning of last year. and then spent much of last year in research mode, thinking about how insurance could play a role in the carbon market, and we can dig into that a little bit more detail. And really formed Oka, the carbon insurance company, at the end of last year to realize an ambition of mine to build a business with purpose, but leveraging 20 years plus of insurance experience to try and solve one of the existential crises of our time. So that's Oka, the carbon insurance company.
Why carbon insurance?
Why carbon insurance is a very simple answer from my perspective. Is it's a huge opportunity to bring a missing part of the capital stack into the carbon market, and the carbon market really exists to really provide an opportunity for large corporations to offset the emissions that they can't reduce. So many challenges exist in the market, both in terms of transparency, in terms of it's fairly opaque. It's been under a lot of criticism over the course of this year in terms of the quality of the projects and the credits that are being issued. And insurance is really a missing piece. So we've identified an opportunity to really bring a set of insurance solutions to really help provide more security, more stability, and ultimately more liquidity. So for me, understanding how insurance in other markets has come and really played a role to help foster growth. It is a nascent market. It's been around for 20 years, but really only over the last 4 years has it really started to scale in terms of importance. And insurance just, felt through the research a real natural place to help provide some of that liquidity. And ultimately, the motivations for us here at Oka is to bring some of that capital, much needed capital, to help solve some of the climate challenges that we face.
So basically, it's another way to channel capital in the capital market into the ESG bigger envelope and the different policies of companies. And in this case, it's it's the carbon offset and credits that different companies. Because I've seen a little bit more on marketplaces that you can trade your carbon offset or credits one company to the other. So with that, what exactly is Oka Insurance? What is the policy? What are you selling? What are you providing? Yaron, one of you can pick it up.
Yeah, happy to take it. So if you think about the carbon offset, right, quite a few companies are making commitments around net zero targets. And as part of reaching those net zero targets, they are buying carbon offsets, right? It's a way for them to effectively decarbonize, especially difficult parts of the business to decarbonize. And there's all sorts of industries and use cases where that becomes important. One of the things that's emerged as you buy carbon credits is that there's risks to those carbon credits. And where there are risks, insurance can be a really good solution to cover those risks. So, for example, two high-level risks that often come into play with carbon offsets are what we call reversal risks and invalidation risks. So reversal risks can be things that will effectively physically reverse the validity of a carbon credit. So the simplest example might be, you buy a carbon credit that's associated with a forest that's supposed to capture carbon over 10 years period of time, and then something happens to that forest, right? That could be, illegal logging. It could be, a forest fire, things of that sort. And then there's a whole host of what we call invalidation risks too, which might be things like additionality. Is it actually removing the carbon that you expected it to, and adding to the carbon removal in the way that was initially projected? So there's a whole host of risks in both of those categories, and we're really building a product to help address those risks so that the buyers have confidence in what they're actually putting money against.
Are there other players in the space, or you're the only one?
We're the only one really building a insurance company providing these, dedicated to providing these carbon products. There are other well-intentioned and new entrants that are thinking about taking products that have started to be created by some of the sort of mainstream insurance carriers. They're very much focused at the operational side of a project. So a project getting funding, the initiation of the project, the delivery of that project to issue credits. We're the very first one coming to market, really thinking in a way of ensuring the credit. Really, to Yaron's point, really providing the buyers of those credits the ability to get recourse if they can't stand behind that credit or the impairment of the value of that credit. And we're building a full stack insurance carrier. So we're the very first one into market that is controlling the pen, designing the product, defining the rating, settling the claims, and building a solution that we believe is needed for the carbon market to prosper.
Yeah, luckily you have Yaron with all of his experience and coming in as a COO to help to build that up, because building a full carrier, it's not simple, and we're about to touch that as well. Now, tell us a little bit how it all started and how do you discover the idea and how do you fund it?
So let's start at the start. I mean, in terms of where the idea came from, it actually came from a very simple introduction to carbon credits, which was our exec chair, a serial entrepreneur in the US, a gentleman called James Hall, actually had a contract for a property to be able to turn some of the land into forest to actually issue credits. And by virtue of us looking at that contract, what became clear was that the credits that would be issued would be linked to this project, and therefore what risks might exist that would need to be protected, both us as the developer or the property owner, but then the buyer of those credits. And that was the kernel of the sort of investigation that I then went on, which was, how do these credits get created? Who's buying these credits? What value are these credits? What regulation exists or doesn't exist for these credits to be governed by? And really, as I got into the ecosystem, really started to understand all the players, everyone was talking about risk. Everyone was talking about quality. So how do I identify that a project and the credits that I purchase are of the highest environmental quality? And then how do I stand behind the claims I might be making to use these credits and the risks that sit around that? And there was just no solution. There was no opportunity to transfer that risk. So insurance just smacked me in the face in terms of saying, well, look, that's clearly an opportunity to build products that meet what customers are crying out for. And then in terms of getting the business stood up, as a previous entrepreneur, it certainly was easier. I think raising capital back end of last year with an idea in a market that was and is expected to grow significantly. It's going to be anywhere between $100 billion and $1 trillion if you look at the reports of where the carbon credit market needs to go by 2030.
Wow.
It's going to be a huge market, and therefore really went out for our seed round in December, January, and we're oversubscribed, closed our 7 million round in January. And really the first 6 to 9 months of this year has then been just validating that we could build a product that customers would want to pay for, which we've now got commitments to purchase once the regulated entity's up and running, and then really forming the partnerships to allow us to stand it up. And then sort of to your latter question, Jill, I guess in terms of the why a carrier, and then which jurisdiction would we want to write the policy, really was a question. So we're a US-based business, we're serving US-based corporations, so we looked at the E&S market, we looked at offshore captives, but ultimately we ended up deciding to build a Lloyd's syndicate right into our own agency. And the reason we went with Lloyd's was for 2 reasons, really. One was it's a global brand. So if you think about the large, US-based corporations buying credits, having a A-rated paper, Lloyd's branding that sits behind that makes a lot of sense. And then the second key thing was Lloyd's gives us a global license. So whilst we're focused on the US market today, we see that as the biggest opportunity. Actually, these projects and indeed the problems we're trying to solve are global. So Lloyd's gives us the opportunity by building this syndicate to be able to write business anywhere.
Wow. Who's behind you? Which VCs?
We have two institutional investors in Aqualine. Their technology fund, Max. There's been a great supporter, and they were a great supporter of Simply Business, so they were a natural backer early doors. And then we've got a European fund called First Minute Capital, actually is a founders fund. So many entrepreneurs that have started businesses, and interestingly, a big lean towards climate and climate tech. So they were the two institutional investors in our seed round, as well as many of our sort of friends and associated family offices that have really given us the fuel to get us going and take us forward.
So how is it going on so far? Because you said you launched in January.
Yeah, so we've built product. We've now got our customers are large sellers of credit, so really intermediaries who are effectively sourcing projects and sourcing credits to sell to corporations, and we're embedding our insurance at the point of sale. And really, they're just waiting for us to get through the regulation, have Lloyd's give us approval, put the reinsurance contracts in place, and the agency's now licensed to sell our product. So we're really just sort of crossing the T's and putting dots on those I's to allow us to bind that first policy come 1st of January.
Oh, okay. Wait, what? Maybe which January? Because maybe I misunderstood. You launched the company in January, or we started selling policies in January? Because
launched in January 2023, 1st of January 2024, we'll be able to bind our first policy.
Okay, that's starting to make sense to me, because otherwise, like, that was so impressive, so fast to build it up, and all of these selling policies and going through all the regulators as a full carrier without buying a shell or off-the-shelf carrier and doing a Bermuda kind of a thing with the impressive. Anyway, it's like, and we would like to introduce a new concept and a new product, which in the US, that could have taken you at least 2 years, at least.
I think it's pretty. I mean, I joined the team just a few months ago, but it's pretty impressive what's been done already, and just getting a completely new product in a new space, with a kind of full stack carrier up and running is certainly an ambitious project. But I think rightly, it's what's required in a market that is this new. I think is that sense of ambition and that sense of being able to control the product and bring kind of the creativity and the innovation into the space.
So what are the two big challenges that you're facing?
So certainly one of the challenges is being a new product is educating customers about it, right? And I think people are very excited about when they hear and when they start to understand what we're thinking, what's in the product, the types of risks that can be covered. But they really need to sit down and kind of delve into the details to kind of get comfort with what's involved in an insurance product that covers carbon credits, because they hadn't thought about it before. So I think one of our biggest challenges is educating the ecosystem, and the ecosystem is complex. So that means not just, the buyers of carbon credits, but also the sellers who are selling to them, the consultants who are advising them, and just all the various thought leaders in the space, I think, are just now getting used to the idea of how insurance can be an important product in the space. And then the other challenge I'll just highlight is, the market's been growing really well the last few years. I think there's also some headwinds now as, what has been a, fast growing, somewhat immature market starts to mature as people are starting to, I think be more educated about carbon credits more broadly. I think there's more oversight. There's more questions being asked about the quality of credits. And so I think some of that growth now is still there, but there's some headwinds now that we think actually insurance can be a solution for, but it's still a challenge that we face.
Silly question. How one gets a carbon credit?
Yes, so typically the carbon credits are sourced by an intermediary. So if you're a large US-based corporation, you are working with the likes of a Climate Impact Partners, a Carbon Direct, a South Pole, these large intermediaries that are either sourcing credits from developers or indeed developing projects themselves. So by virtue of effectively sourcing the credits, they are effectively meeting the demand from the buyers to say, I need X amount of credits of a particular profile in a particular location to meet my net zero targets and meet some of the standards that I'm setting. And that's effectively who our customers are. So we're working with these intermediaries to embed our insurance product, wrap the credits so that when they source these credits and they sell them, the insurance is included. And effectively, it sort of helps them for two ways. One, an insured credit should be more valuable than an uninsured one. So from a reputational standpoint and signaling quality, that's, to Yaron's point, helps to sort of try and raise the bar in the carbon market. And then secondly, starts to mitigate some of their own contract risk or diligence risk, which buyers are starting to really start to impose into the market because of the challenges and the reputational risks that they're facing of investing in these projects and buying these credits. So we really see insurance as a lubricant, as a sort of liquidity ability to really help provide confidence and security, as it does in other industries and markets.
So for now, your distribution channel is embedding yourself, as you said, point of sale, embedding insurance within those carbon credit providers and offsetters. And everything is based, okay, let's try to help the buyers to reach their net zero carbon emission by offsetting with the credit.
Exactly.
Oh, okay. No, I just wanted to make sure that I understood it, because something new operation with all the beauty of the insurance industry in that complexity, especially when it comes to the market in London, it's fascinating. So do you need any reinsurance play? Because you have the syndicate.
We're using.
Is there a need?
There is, as ever, I think what the beauty of the insurance market brings to risk is this ability to syndicate and tranche capital to really give us, as the ultimate distributor of the product, the ability to scale quickly. So by bringing reinsurance partners in from day one, what we're hoping is that this is a new market, new products, new types of claims that are going to be brought. As we learn together alongside the reinsurers, then we can really scale the capital stack, which is going to be needed to meet some of my projections that I shared earlier, both around the voluntary carbon market, but indeed the size of what this insurance market could become. I think it would be naive for us to think it's only us that can solve that on our own. So I'm delighted that we're going to be putting those sort of partnerships together.
So how the claim side works? Because you're going to be judged at the end of the day by your combined ratio, and we really want to understand the loss ratio. How is that going to work?
Yeah, I think I'd start with, and I think Yaron and I think sort of share a lot of similar values in terms of building businesses. We're here ultimately to pay claims. So we expect claims, we want to pay claims. And indeed, I think for the product to stand up in the market, buyers will want to make sure that obviously they've got recourse. So really our claims is set about by virtue of there's these registries. So the registries are the governing entities that issue the credits. So as a buyer of the credit, ultimately you're trusting in the methodologies that they've applied and the issuing of the credits. They're the sort of judge and jury on if a credit is impaired in some way. So we gave some examples earlier of whether it's a wildfire or whether the methodology has been incorrectly applied. Ultimately, that's where the impairment or that removal of those credits would take place. So we're working alongside the main registries in this market to effectively allow us to settle claims off the back of an event or an incident taking place.
Well, we are recording this second week of October, the beginning of second week of October. Hopefully it will be out towards the end of October, which means we're going to see you guys end of October, beginning of November. Are you attending ITC? Any big plans for InsurTech Connect?
Yeah, I'm actually presenting there. So I think both Yaron and I will be there. I'll be presenting on day 2. It's going to be a welcome return for me. I was actually speaking at the very first ITC back in, I'll show my age, maybe it was 9 or 10 years ago. So we're looking to present there on day 2. Looking forward to meeting some more connections there.
I think that's right. Obviously, Chris and I both gone to ITC, I think, since the early days. And what's great about it is, you're kind of part of the broader InsurTech space. So I think for us, given the stage that we're at, it is still about, partnering, talking to our reinsurance friends, other folks in the ecosystem, and just starting to educate the market also more broadly about the kind of product that we have and what we're doing, because I think that'll help. The more people know about it, the more they can help get the word out and help us solve that sort of education challenge that we have.
So let me ask you the last question that I'm asking everyone. Can you give the audience a word of advice? Both of you started companies, been in the industry so many, many, many years. A word of advice if it's about InsurTech, if you don't have, or starting a business, or worst case scenario, a great book that one should read.
I'm happy to go.
Go
first.
for it.
So one piece of advice for me, is just find a place where you can keep learning. So I think one of the things for me, Gil, even as you said it at the beginning here, I feel like, I'm a little bit unique now that having crossed streams from life into P&C categories, which is a unique thing in our space. So people sometimes look at me like I have two heads. But one of the great things is, as an entrepreneur, just finding the space where you can both leverage your expertise and your sort of what you really know well, but at the same time, keep learning new things, I think is kind of the magic combination, because it keeps you excited about adding value in new ways and about doing new things. It's been really gratifying for me. And it's something that as I talk to kind of entrepreneurs, I try to highlight, what the learning opportunities are for them moving forward too.
Yeah, I guess I've got two bits of advice. One specific to InsurTech, and I guess one to starting businesses. I think on the InsurTech side, the bit that I've really learned, I guess, over the last 20 years is it ultimately comes down to distribution. So, any good insurance business is about how are you meeting ultimately what the customers want. And I think you can lose sight of that quite often as you build insurance businesses. A lot of people I've seen, and indeed I've fallen foul of myself, you sort of fall in love with the product. And it's very easy to fall in love with the solution rather than the problem. And the problem ultimately comes down to distribution, because how do you make it as easy as possible and effective and efficient as possible for people to buy this wonderful product that we deliver into the world? So that's a very insurance specific one. And then the second one, I think, in terms of a lesson for any entrepreneur thinking of starting a business or starting a business, is really surrounding yourself with good people. So it's all about marshalling the right resources at this stage. We're a small, focused team of experts in the insurance space that have started Oka, but it's about how do you make sure that you build that right skill set of team, the right investors around you, the right advisors around you, the right experts, and you've just got to think carefully about how do you bring all those resources around you, because it is very rarely, if ever, all about you. So that would be my final piece of advice.
Yeah, it's not about you, it's about the team with the right vibe. People like to call it culture. Maybe it's part of it when you grow up, because the first, that nucleus team of founders that come with the right energy, vibe, and then when you scale it up, you need a culture to maintain it in the right direction. It's so critical. I completely agree with you, and we've seen it so many times. I love it. Chris, Yaron, thank you very, very much for joining me today. It was a pleasure and honor talking with you, and learning new things about carbon offset and carbon offset insurance. Love it. Thank you.
Thank you.
Thanks, Gil.